Hi everyone and welcome back to today's More Report on Wednesday the 22nd of April with me, Rich Perry, market analyst at Hantech Markets. I'm going to move on to Eurodollar now, and this this sort of correction that we had building on Eurodollar just started to sort of consolidate a little bit, and you could argue that the candles that we've seen in the last couple of days have started to sort of, this is almost a doji pattern candle, which suggests uncertainty with the underlying trend or the prevailing trend. And I think you can probably understand the uncertainty that the market is seeing with regard to news sort of contradicting, and then sort of on Greece. And we're seeing a lack of real certainty in terms of how that's going to play out. So that's hence why you're probably seeing the market and the technicals sort of following on from that same sort of theme as well. But generally speaking, I'm still pretty negative on the euro across the board, and I still think rallies are still seen as a chance to sell. Now, given that, this is the hourly chart. That was the sell-off that we had from 110.35 down to 105.19. Look at the amount of times that it's using the fib levels. Had a rally to the 61.8, that fell over. Let me just zoom in. Rally to the 61.8, and that fell over. You've then seen a consolidation around the 38.2%. Subsequent breakdown didn't quite make 23.6, but now once again you're seeing that consolidation hit around the 38.2%. And look again at 50. 50 capped yesterday's high, and could be now in the process of capping today's high as well. So these Fibonacci levels on the hourly chart are certainly having a role to play. Now you've got this head and shoulders top pattern that's still intact, although you have rallied above the neckline resistance. That theoretically still remains intact until a move above 108.25, which is that right hand shoulder. So just bear that in mind. You're still in this bear phase. But obviously the improvement that we've seen in the last couple of days has improved the chart, but not dramatically. I would say that not dramatically. Effectively, you're still underneath the back underneath the 108 pivot level, and obviously also therefore underneath the right hand shoulder as well. So I'm still confident that this top pattern is playing out. I'm not getting not sort of turning on my opinion quite yet. I still see rallies as a chance to sell. I don't really see a great deal of improvement in the MACD lines on this sort of rebound in the last day. So I think that this again is with the fact that you're sort of finding resistance again around that 50% fib level, I think is interesting. So 107.80 is that initial resistance, and that comes underneath obviously 108.24. 25, and then subsequently 108.50. But I still think that there could be some. Well, there is still a bearish outlook to this sort of consolidation here. The fact that you've got this top pattern in place. So I would be looking at using this rally as a chance to sell. I think that it's likely to come back and retest the lows at some stage soon. 106.60 is that low. Obviously, it needs to get back below the 38.2% fib level, which is 107 sort of 20 area. 107.15 was there, a couple of lows there. So a few levels for you to work with, but certainly no real decisive move on the dollar, considering we've had this rally in the last day or so. But still, I'd be edging towards the bearish side. So I wish you good luck in your trading on euro, and I'll speak to you later. Thank you.